What is up, YouTube? Welcome to another video on high altitude investing. In today's video, I'm going to be sharing with you 3 pro tips that really transformed my trading and can help you make massive gains in the coming moves with the market. So it's going to be really exciting. This is something that you can take away and start implementing very quickly. And these are the strategies that most professionals use in Wall Street, in massive trading desks, or even professional traders that are more private traders that don't go with the institutional money. So this is what I really like to say in this video, that these are some of the best trading tips, the most useful ones. You might not initially want to do them because it actually takes a little bit of work, a little bit of calculation, and sometimes, people don't want to do hard things. But I highly encourage you guys to do hard things and take what you learn in this video today and implement it into your trading. I promise you, you will see a massive change in your results. So go ahead and hit that like button. If you are a new viewer, hit that subscribe button. We also have the Discord chat channel, new members coming in every day. Links are in the description. And you guys can follow me on Twitter as well for some more analysis. But without further ado, let's get right into this. So tip 1. Win ratio plus risk to reward. This one is very vital for people to understand because this goes along with risk management, which I talked about in not my previous video, but the video before that. And essentially, risk to reward is where you set your stop loss and where you set your target. So how much you're willing to risk versus how much you're looking as a reward. And win ratios are very correlated to risk to reward because in order to keep a profitable trading strategy, you have to understand your win ratio with your risk to reward. Let me get an example here so you guys can maybe better understand. If you are taking a trade with this trading plan tool, and let's say that you buy Bitcoin at current price. You can take this risk to reward ratio, this is a trading plan tool, and you can see that if I drag this all the way up to here, in the center of this green box, you see 280% gains on the upside. On the lower part of this green box, or this red box, you see a 56% potential downside. So this gives us about a 4.9 risk to reward ratio, meaning that you are going to reward 5 times more than you're going to lose. That's very important to remember because win ratio, meaning how many trades that you take that earn profit and how many trades that you take earn losses, is going to be important with your risk management so that you can actually line them up and see if you're going to be consistently profitable in the long term applying your trading plans. So what we see right here with Bitcoin specifically, obviously that's a little bit of a drastic risk to reward ratio, but let's just say that you wanted to play a trade from support up to resistance. And let's say that you want to set your stop loss just a little bit below the wick that we saw right here. This will give you a 5.71 risk to reward ratio, and you can see this in the red section down here where it says 5.1 risk to reward, and then you can see that you would have a 78% gain and a 13% loss. So that means that your winners are significantly bigger than your losers. And this is why traders can be consistently profitable even when their win ratio is below 50%. So let me just go ahead and explain this. If you have a 5 to 1 or 5.71 risk to reward ratio, that means that you don't even have to win. Or let's see, let's do a 1 to 3 just so it's easier to calculate for me. If you have a 1 to 3 risk to reward ratio, you only have to win more than 33% of the time, because your winners are so much bigger than your losers that you actually can continue to profit even when your win ratio isn't like 100%. Something that really gets traders when they are new to trading is they think, oh, I need to win every single time, or oh, I need to win 75% of the time, or over 50% of the time. That's not true. If your winners are significantly bigger than your losses, then you don't even have to win 50% of the time to be in profit consistently. So it's a little hard to wrap your head around at the start, but again, it's just the simple fact that your losses will be cut off quicker and your gains will ride, you let them ride all the way up into your target. So that's win ratio and risk to reward. Personally, there's been times in my trading career where I had a 75% win ratio. It was during this parabolic move right here where Bitcoin kept continually going up. So I had a lot of really, really good trading conditions. Those win ratios are not something that you are going to see all the time. As the market conditions change, you'll actually find that your win ratio will fluctuate quite a bit. But as long as you manage your risk with tight stops and large targets, you can usually get in the profit even in a little bit more rough trading conditions. So that's tip number 1, win ratio plus risk to reward. This one personally has changed my life. What I recommend doing at the start is going over to TradingView and doing some paper trading where you find a good trade setup, you set your stop loss, you set your target. You don't even have to really get in the trade yet, although I do recommend that you start taking real trades in this way after you get the hang of paper trading. And just see if you can time the market. See how many times you get stopped out. See how many times you hit your target. And the great part about this is if you get stopped out, it's not a big deal because you know that you didn't lose that much. And you also don't have to have so much pressure on yourself that every single trade has to be right. It just changes your lens of trading and helps you keep a lot more clear head, especially when you're swing trading these moves from peaks like this, or buying the dip on support. Or I did some swing trading in this area here with very high success, and risk to reward, win ratio, an amazing thing to implement into your trading that all pro traders use. And again, if your winners are 3 times bigger than your losers, really, you only need to start winning more than 33% of the time to stay as a profitable trader in the markets. All right, tip number 2 is back testing and forward testing your strategies. So if you figured out an indicator, or you've discovered how to use Elliott waves, or maybe you just invented a new way of trading. Maybe you figured out that if a market drops a certain percentage in a certain period of time, then you can buy the dip and profit off the bounce. So that's called back testing, where you come back into the market and you're like, okay, maybe my trading plan is that when Litecoin falls every 50%, 50 to 60%, I'm going to buy the dip. And you come back and you're like, oh, if I would have bought this 70% dip right here, I would have seen a lot of nice profit into the future. And then you can go like this. Oh, if I would have bought this 65% dip here, I would have saw a lot of profit in the future. And then you can come right here and you can pull down again. Oh, if I would have brought this 75%, 71% dip here, I would have made some nice profit off that bounce. We can even do it right here. Oh, a 50% dip here, I would have made some profit off of that bounce. Now, it's not going to work perfectly every time. As you can see, this was an 86% drop. So that's quite a bit more drastic than the 70% drops. But if you're buying dips between 50% drop, 70 and 80% drops, you still have seen very significant upside moves after these dips. This would be one major exception where Litecoin fell 97% down. And that's just out of the range of percentages that we're looking for on our trading plan. Like I said, 50% drops, 65% drops, 75% drops. Those are all good buying opportunities. But, something that's like an 86% drop is a little bit stretching it. This one did indeed work out. But a 97% drop, that's not the trading plan that we have here. So back testing is essentially making a trading plan and going back and see how many times it works for you. Testing to see if the market will continue to make profit. If you see a 75% drop in the market, you can buy, and then you can, sell into the pump that comes after that. So that's a back testing trading strategy with Litecoin. And the reason that you have to back test first is you want to find your win ratio. For this example, every single time that Litecoin fell 70, 65, 50% or 70%, we saw a nice rally afterwards. So those are the numbers that I would have been watching for in this trading plan. It worked 1, 2, 3, 4 times. So it had 100% accuracy between those ranges of 50 to 75%. Now, the thing is the market isn't going to behave the same way always in the future. So once you get a strategy that you can back test with a high probability that you're going to make money, you have to forward test it. You can forward test with paper trading, or you can forward test with real money, where you find another point in the market where it has dropped that much. For example, Litecoin has fell in our given range currently, and a little bit lower will probably happen to the support level. So a 72% drop, it's following our trading strategy, and we can forward test this because it actually hasn't happened in the market yet, meaning that the drop happened, but the bounce afterwards hasn't happened. So you have to back test your strategy first, find out the win ratio, and then forward test it to see if you can get a similar win ratio in the future. So that's tip number 2, back testing and forward testing trading strategies. This is what all professional traders do. There's all different kinds of strategies you could do. You could do whether the MACD falls below a certain ratio. You could do if the RSI falls below a certain ratio. You could do channels. Every single time it hits the bottom or the top of a channel, you can find the probability that it will do the same thing that it did last time. And you can start to make money off of that, back testing and forward testing. So that one's really awesome, you guys. And number 3, journal your investing and trading. My personal journal is my YouTube channel. I also write stuff down all the time on my notebooks or in Google Documents of different thoughts I'm having, or different documentations of win-loss ratios if I'm looking at different strategies, what works best for me. And I'll back test those strategies, I'll forward test them, and then I'll journal all of this stuff. This is super powerful, you guys, because, I mean, look at these markets. They move in completely crazy ways. So if you're not documenting what you're learning, if you're not documenting your mistakes, if you're not looking at where you went right, looking at where you went wrong, and having realistic, honest perspective on your own trading strategies, you're going to get lost at sea. You know, the cryptocurrency markets is a vast ocean of confusion. And if you don't take the time to actually set it up in a way that you do not get confused, it's going to bite you in the ass. So journaling, I believe fully in the freedom of access of information and the abundance mindset. So I actually highly encourage anybody that watches my channel to make a YouTube channel about trading, even if it's just for yourself, to document what you're doing. And if you do make those YouTube channels, you'll find that your trading gets better, you take it more seriously, you have a dedication to it, you have people that will comment and teach you even things that you didn't know. It's just really a beneficial thing for everybody. So if you do make a cryptocurrency YouTube channel, go ahead and let me know on my Twitter. Maybe I'll shout you out. And if your channel grows to a nice size, we could even do collaborations together. But those are my top 3 trading tips if you want to think like a pro and make massive gains in the cryptocurrency markets. Again, hit that like button, hit that subscribe button, comment down below if you have any questions, join the Discord, follow me on Twitter, and I appreciate every single one of you guys. As always, stay profitable out there.